engineer Asad Mahmood, who's energy policy and planning expert with us. First of all, Dr. Salami, when we look at the situation at this time, of course, UAE has left OPEC and there's growing speculation about dissatisfaction among some members. If more countries were to exit, how would this affect OPEC and, of course, influence as far as, what is being called market influence? How do you see that?
OPEC is the most influential player in the global oil market. Of course, they have no influence on when the Strait of Hormuz opens or remains closed. However, with the departure of UAE from its membership, it means that OPEC can divide the UAE quota among other producers or members of OPEC capable of raising their production, like Iraq, like Kuwait, like Saudi Arabia, like Qatar. So the effect on the decision maker in OPEC has no effect whatsoever. Furthermore, what the UAE has been producing is part of its quota, and the quota it was given to it in 2021 was 3.5 million barrels a day. But the UAE never achieved that quota. Before the war, the latest figures we have is that it produced 3.3 to almost 3.4 million barrels. So UAE will be producing outside OPEC what it was producing inside OPEC. This means that it has no effect in global supplies. Of course, with millions or 100 millions of dollars of investment, it is possible that the United Arab Emirates can raise its production maybe within 5 years to around 4 million barrels. By that time, the global demand for oil would have increased very significantly.
When we look at, whether OPEC is still capable, like you have mentioned also, of influencing oil prices, as far as geopolitical events are now, of course, and it seems that they are more powerful than the cartel's production decisions. Is that a correct statement or assessment of the situation at this time?
For the time being, what OPEC is doing is raising its production. But this is futile as long as the Strait of Hormuz remains closed. They cannot export no matter how much the production has risen. But it is a signal to the world that OPEC is determined to maintain its share of the global oil market, and that it will respond once the Strait of Hormuz has opened. It will respond to global demands for raising production, and it has a small bit of capacity. I would say small bit of spare capacity, but not much to affect the global demand. However, by showing willingness to increase production, it is trying to put a cap on oil prices. This time will be extremely difficult because nobody can control the oil prices even after the Strait of Hormuz is open. The reason is that some of the oil producing facilities in the Gulf region has been damaged, if not destroyed. That will take between 8 months to 12 months and around $50 billion to repair the damage. That's why I expect when the strait opens, what will pass through it is not the 20 million barrels a day that used to pass before the war, but only 50% of it, 10 million barrels a day. that will keep prices very elevated. They might reduce a bit by a few dollars, but the prices will remain elevated between $85 to $90 to Brent crude per barrel. And that will be with us for many years. I think we are heading with the depletion of most of the inventories and the strategic reserves of major producers like the EU, the United States, and the Asia Pacific region countries. I think we might face shortages in the summer months, and I wouldn't be surprised if Brent crude exceeds $120, and somebody says it might even touch $140 a barrel.
But when we look at, like you said, of course, that the world will reel from the effects of the closure as far as the Strait of Hormuz is concerned. Regardless, and I think that there are no two opinions about that. But in terms of the OPEC itself, how serious are the risks, in your opinion, of fragmentation within OPEC, and what can be done to keep the alliance together, in your opinion?
You and I know that OPEC supplies more than possibly 20% of global oil supplies. The Strait of Hormuz also is a place where 85 million tons of Qatari LNG pass every year. So by keeping the strait closed, the global oil market will be missing around 14 to 15 million barrels of oil and 85 million tons of Qatari LNG. That will have adverse impact on prices. That's why LNG prices are high, and there will be some sort of competition between the EU and the Asia Pacific region, particularly China, for LNG. China is lucky in that quite a bit of LNG from Russia through the Northern Sea route from the Russian Arctic.
Dr. Salame, let me come back to you. On that note, let me come back to you. I'm going to go to Engineer Asad Mahmood, and then I'll come back to you. Asad, look at, we're talking about the effects of the closure of Strait of Hormuz, and of course the fact that it seems, and of course Dr. Salame also was of the opinion that the world will reel from the effects of this closure, many months after this is resolved, it seems. In terms of this closure and its likely consequences, if it persists, what do you look at, and how do you see it, and the disruption to the global supply chains particularly? Can you hear me?
Yeah. Yes, I can hear you. You have just mentioned very pertinent points, and also like the statistics shared by our other eminent expert, they are very eye-opening, and definitely all the planning which is being done by the developing countries like Pakistan and others who are facing the disruption effects, they have to come up with their contingency policies, and definitely as the stock is running dry very quickly, or has already dried up in most of the countries which had the stock as a contingency, or in terms of energy security, we need to look into coming up with a one of the policy which many countries have adopted is focusing on, for example, the energy conservation side of it. And similarly, Pakistan also has adopted various things. So it should not be, again, like the catchy point is basically, rather than focusing on ad hoc level policy measures, the countries like Pakistan and others, they have to work out in such a way that all these contingency plannings, be from different sectoral perspective, be it like your industry, transport, or any other sector which is dependent directly or indirectly on the on the trade routes itself, and ultimately primarily the fuel oil impact is definitely going to have an effect not only on, like, as you can say, the prices, like as has been discussed, like transport sector is going to get affected, which has already affected a lot. Aviation is there, you have fertilizers, pharmaceuticals. So all the industries, all the sectors, they also need to balance or recover their losses in one way or the other. So there should be some like incentivization given by the relevant departments within the respective countries, by the ministries, or like there should be some sort of even the OPEC countries, even the things become stable, you know, that the price seems to be not in their control, even if because the trade routes are not in their control at the moment, even you supply surplus crude oil, things are like the people are going to stock it. So I can foresee an increase in the inventories in the coming days, every country going to build up their strategic reserves, and the more you are going to refine or drill or refine for your strategic objectives, that is going to
let me take Dr. Salame's opinion on this. Dr. Salame, do you agree in terms of incentivization, you know, maybe, but of course when we look at developing countries, the room that they have for giving that kind of, you know, giving those incentives is, of course, you know, it's not very large. And when we look at Iran continuing to disrupt energy markets, in terms of how much influence does OPEC realistically have over this area, if at all, now?
Vis-a-vis the Strait of Hormuz, I think OPEC has currently no influence on when it will be opened or whether it will remain closed. Iran controls the Strait of Hormuz, and as you know, that is Iran's most strategic weapon. In other words, it is using it to defend its rights and to cause an end to the aggression against it by the United States and Israel. So that's the situation. Now, the issues which confront the Strait of Hormuz is that Trump wants Iran to deliver to the United States 400 kilos of enriched uranium. But Iran is adamant that it will never do that because that is part of its sovereignty and it will not give it to anybody, not even to friends like Russia. And there lies the problem. Iran is adamant.
Look at particularly, Dr. Salame, you're right, you know, that in terms of whether Iran will give it, and it seems there to be that point is extremely important. Let me go to Dr. Mahmood, let me go to Asad, and then I'll come back to you. Asad, when we look at China and the fact that, of course, China has been purchasing less oil and drawing on its strategic reserves, it seems, at this time. How important has this been, in your opinion, in preventing higher prices?
Well, definitely, I think that has been a long-term plan of, in fact, when we talk about the energy security perspective of China, they have been stock taking such large reserves, and they were better prepared for the situation like this, and it also raises it could be quoted as a sort of good case study for other countries, so that they can absorb this shock of fuel supply disruptions, which is going to impact their GDPs badly. So I think and their discipline, apart from the energy transition, because the transport sector being one of the largest fuel guzzler in most of the countries' economies, but on the other side, we need to see, like, it's also the exporter. China is exporting a lot in terms of different high-tech things to the hardwares and things like that. So that split without impacting their GDPs was worth noted. And I think every country has to look into like working out or developing their strategic reserves as per their own potential energy sources and leverage and taking leverages of whatsoever the indigenous potential is there in every country. But nevertheless, this also has raised another a critical point that, like right at this moment, since we are like the countries like focusing on the budgets, again the foreign exchange as the prices have escalated, so it's also challenging your foreign exchange reserves. And then similarly, ultimately, and that is also, that has to be looked into, like the currency aspects, like
On
currency.
that note, let's come to that. I'm going to include Dr. Salami in this. So, Dr. Salami, your point and your opinion on this China factor, and also the fact that, of course, when we look at China's economic activity, it's accelerating, and oil demands, of course, we've seen rebound strongly. There's no doubt about that. But what impact has that had, or can have potentially, on global prices and supply availability? And of course, earlier what I asked Asad also, in terms of them using their oil reserves. What is your take on this whole scenario as far as China is concerned?
China, as you know, is the biggest economy in the world. Before the war, its imports averaged 12 million barrels a day. During the war, it reduced its imports of oil deliberately by almost 44%. The reason it did that is to calm down oil prices, plus the fact that it has prepared itself well for the oil crisis in terms of amassing 1.5 billion barrels of strategic reserves, a production of 4.5 million barrels daily, in addition to having the biggest successful paper in its hand, or strong power in its hand, via Russia. Russia has been supplying an increasing amount of oil and gas and LNG to China. So what I am saying is that China has cushioned itself against the crisis. That is why, although it is the biggest economy and the biggest importer of crude oil, it has been the least affected by the oil crisis. Now, it comes the point where it is strategic reserves are starting to decline, and energy security is uppermost in the thinking of Chinese decision makers. So they don't want them to go very low. That's why I expect China to start importing oil now. And of course, it will be mostly, or 90% of it, it will be Iranian oil. And that means it starts to refill its strategic reserves. It has some influence on increasing the price of oil. But as I said, energy security is uppermost for a country like China, which can pay any price for oil and gas to keep its economy afloat.
But when we look at, Dr. Salami, before I go to Asad, how realistic is it to expect, in your opinion, green energy to significantly reduce dependence on oil within the next decade, for example? Dr. Salami,
Is that
can you? Yeah. Yes.
China its economy will continue to grow. By this year, despite declining economic growth in the world, I think it will still achieve 5% growth, if not more. Why? Because it is the most integrated economy in the world in terms of the Belt and Road Initiative. That's one thing. Of course, it has the most competitive economy and the most innovative economy. So it will grow, and with it, its demand for oil will grow. Iran, China will always find oil if it is prepared to pay the price. For instance, Russia has been supplying more than 2 million barrels of Russian oil to China. Russia can double that, but that will come at the expense of India and other Asia Pacific region. But China will definitely get the lion's share of Russian oil, Russian LNG, and Russian gas. So it will manage extremely well.